Everybody, good morning. Good morning. Good morning. Morning. See, we got Robin, Rex, and Dan, and Dawn, and Diane. It's funny how the names all clump together with the D. Sergio, David, Mad, Gary, Darren, Svenborn, Ted, Will. Good to see everybody. Remember, today we have 30 minutes of awesome coming up at 5 p.m. Eastern Time. I'll try to do my best to wear my bells and be positive and, come and do that. So that is coming up later today, 5 p.m. Eastern. Set your reminder. It takes people like you there to make the show. And channel members do get priority on that show. So if you want priority on your ticker request, come see me 5 p.m. Be a channel member. And usually we do it for at least 30 minutes. Usually it's like an hour and a half. So I typically stay until we're done. Try to catch everybody. So that's what I got to say about that. Anyway, today, Jerome Powell talking in front of the Senate Banking Committee, testifying, not just talking, but testifying in front of the Senate Banking Committee. And, well, maybe that could bring some volatility, especially if he says anything that's unexpected. We'll have to kind of keep a watch out for some volatility. Now, you may be like, well, what time is all that going down? I'm not sure. Pull up my favorite forexfactory.com/calendar. And we look down in here and we see that the show is set to go off at 10 o'clock right there. There's probably a live stream of it. There usually is. If you really want to bore yourself to death, maybe take a nap, you could watch. It's usually full of bullcrap. And then, of course, this one popped in right here. If he actually goes live and says something crazy, volatility, baby. When we're not used to Biden just jumping up there. Last 4 years, we haven't had a president that would just go live and announce some stuff and the market react like crazy. So if he's got something to say that could affect the market, whenever this happens, could be volatile. Set to go off sometime between 10 a.m. and 3:30 p.m. Tentative, though. So we don't know for sure. I guess keep a watch out if he goes live. Yeah. So coming up tomorrow, though, we have CPI. How is inflation going? I think we're getting a little spicy on inflation right there. And we got Powell testifying in front of the House. What is it? It's not the Banking Committee. It's the House Financial Services. That's it. Financial Services Committee right there. So tomorrow, Powell will be testifying again, but in front of the House of Representatives. Today is the Senate Banking Committee. So back to back. And he has been known in the past to just kind of say some stuff that was surprising. He usually stays down the line. This is kind of where he, usually during these testimony things, he kind of, if he's got a policy change thing, he needs to kind of ease into the mindset of the population. A lot of times he'll unveil it here. I don't know that anything's going to be surprising at this point, more than things President Trump says, but, hey, never know. So CPI is probably the big mover tomorrow. That's pre-market. So be careful out there. We might get a big dip. I'll show you why. PPI coming out on Thursday, which is Producer Price Index. Now, this is the correct order. We usually get CPI first, PPI second, and then retail sales after that. So this is the correct order. Last month, we had PPI first, then CPI, and turned out the CPI was a little spicy. So these are back in the correct order, so I'm not really expecting any big surprises. And core retail sales coming out on Friday on the pre-market. So these three back to back numbers here, all in the pre-market, Wednesday, Thursday, Friday. That's kind of what we got cooking this week right there. And this should kind of reflect the post-holiday retail sales, like coming into January. And how accurate they are, I don't know. That It's one thing. I saw some stuff on X. People were saying that Elon should tackle government number releases next, since all the jobs have been made up and all the retail sale, all these things have been they've been cooking the books, and I mean they're not even done finding billions of dollars of waste. So I don't know that government numbers matter much. We'll see. We'll see what happens. And so without further ado, all trading involves a substantial risk of loss. Just to remind you, if you do this thing we do called trading, you may lose your money. And there's a good chance of it, really. I mean, it's, given the naive condition, it seems like we're 70% likely to lose our money. I mean, 99% of traders lose money. It's kind of like a widely held statistic. So be careful out there. Past performance not necessarily indicative of future results. That means just because you were a good trader or you are a good trader doesn't mean you'll keep being a good trader. So just because something worked in the past doesn't mean it worked in the future. Just because I predict something and get stuff right in the past doesn't mean I'll ever get another one right in the future. And this presentation tended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instruments. So don't buy stocks, don't buy options, don't buy forex, don't buy futures, don't buy cryptos, don't buy treasuries, don't buy bonds. Just don't trade them. All right. There's a substantial risk of loss if you can't handle it. If you desire personal financial advice, moving on. The list is pretty long today, about 50 something tickers. And so why do I think that we might go down? Right? Why? Here's why. We came up to this point right here. And now we're sitting right here. This is a set of lower highs. On top of this set of lower highs, while we did break up, tilted the odds were going higher because we back tested twice. But the problem here is that the way we've set this up, that's a downtrend. That's a corrective move. Now, it could just be a complex corrective, very complex corrective. A, B, C, D, and we need an E to finish this up. That's not usually the way this works, though. Not usually the way this works. So what I'm looking at right here is that this maybe possibly was the A wave down. We got a little too excited and actually made a higher high here accidentally. This may have been the A wave. This may have been the B wave. And we may not even, we may be still working through that, or possibly. Or this could be a, maybe it's not even an A wave. Maybe this is all a complex corrective, and this was a W, and this is an X, since it was just one big fast move, very consistent with an X. And now we're getting a Y, which is a complex corrective wave, and we're starting out with this crap right here, and we're going to end up down here like this. This is what I'm cautious about right now, because this price action is very sloppy, overlapping with a downtrend of highs. That's a red flag warning. All right. We attempted to break out once, attempted to break out twice, and yesterday we just muddied it up even more. Gives me a bunch of caution. Now, we can flush it right down here pretty quickly. Pretty quickly. What is that area? Well, let's just take a look right down here. Jump up a few time frames. That spot right down there is the daily roadmap line. Right there. It's right in there. Lower low. And that right back there that we did mid-January. It kind of looks like what we might do. Something right down in here. Then we pop up here, possibly up here, and then we go down even bigger. And this might take us well out into the summer to do the rest of this stuff. Like, this could take us a couple weeks to finish this up here, get down here. Then we could take out well into the summer, get up in here. There'll be some humps and bumps and stuff along the way, I'm sure. And then later in the summer, we could go down the toilet bowl. Flush. That's what it's kind of looking like. I speculated we might see that kind of pullback coming into the year. I'm not sure we're done yet. I thought we'd wrap it up by the inauguration. Just not doing it. Just not doing it. So, we're just still in this corrective funk. And really, you zoom out and look at it, we've been right in the same vicinity since November. I mean, the market really hasn't gone anywhere. We kind of came up really quickly here in November, and then we've been sitting there December, January, February, a little bit higher, a little bit lower, a little bit higher, a little bit lower. I mean, we're just kind of sitting right there. Now you look at the NASDAQ, and we've just been sitting right here at the July high. August, September, October, November, December, January. I mean, look at this. We did a dip, we did a little pop, and we keep touching that level right there. This looks like it may need to flush right back down here. It's not breaking above this upper downtrend of highs. We did make a valiant attempt, rejected at that 786. Made a lower high, made a lower high. If you're not familiar with NASDAQ, and this is the NQ1 exclamation point on TradingView, which is the NASDAQ futures. Why am I using futures and not the cash index? Because these trade 23 hours a day, 6 days a week. We get data, whereas the cash indexes stop trading at 4 o'clock and don't make a candle till the next open. So, look at all this rejection on this upper downtrend of highs. Not super awesome. So even though we broke above this aggressive downtrend of highs, backtested it, we've been unable to get continuation. That's a big red flag. All right. Big red flag. So instead of me sitting here beating the drum that we're going bullish and then watching everybody get ripped when we do a correction, in the face of new information, you need to prepare for what might be a dip down here, lower than this low. Set your sails, prepare for what might be a bigger correction. We're probably going to go back and retest that July high again. Now, I'm not overly bearish. I'm not trading for it necessarily. I'm just kind of not doing a lot. All right, this needs to resolve. I'm not sure we're breaking out. I'm not sure we're breaking down. The warning signs have amped up. Now we're back. You know, I was like 75 sure we were going higher. Now I'm bleeding back off to like 55, 45. 55 higher, 45 coming down here. After rejecting this for a few solid days here. I mean, the market teaches you lessons, right? Like, don't stay overly bullish in the face of bearish price action. I'm not giving up all my longs because, well, this could just all of a sudden get sparky and break out and run. I'm not loading up on shorts because it doesn't have to go down. I have a couple protection trades. It's kind of like insurance. You know, you buy insurance and you don't want to claim it. I mean, you don't buy car insurance and hope that you cash in on it, right? Nobody wants to wreck their car. You don't buy home insurance and hope that your house burns down so you can claim the insurance. So this is buying downside protection is an insurance policy that I hope I don't cash in on. I hope it, just goes away. So I have that sitting out there. If we break down below that low, probably setting the stage to come down here though. All right, so that candle yesterday at the bottom of it, that low, it's important. It's important on ES, it's important on NQ. Russell here, rejecting pretty hard on that zone right there. Look at that. Coming on down. The support for this one is the roadmap line. If we don't hold it, that's the zone right there we're probably going for. CL. Look at this. Look at this. Sign that inflation might be ramping up. Get up here. This one could come up to 90. Probably up into the 80s, possibly the 90 area right there would be the target. Then gold spiked up overnight. and rejecting pretty hard. Jump down in the time frame and look at this. Look at that. Ramp up, ramp up, ramp up, ramp up, ramp up, ramp up. Reject hard. Right there. Took it all the way back. One 15-minute candle. Broke below the 15-minute roadmap line. Back testing now. If we maintain this right here, if we come up to like a 618 retrace, very, very cautious right now. If we come up to like this 618 retrace right here, this initial move down, move up right there, hold that, turn down, break back below that, we're probably going down possibly to the daily roadmap line. Could be talking about back to 2,600 on gold. Maybe just back test. What would be funny is that this downtrend of highs, just two highs right there, and this roadmap line all come together, and we test it right in this 2670 area. Funny to me. I mean, it's not like hilarious, but funny coincidence, you know, funny peculiar. So that might be where gold might be heading. Kind of using silver as a little bit as my canary in the coal mine here. SI1 exclamation point. This one turned around pretty viciously off of that retrace right there. We tried to push higher. Push down pretty violently. Retracing. If this breaks on down, this is probably coming down here in the 27 area on silver. And that may be what we need to do in the precious metals before it can all go higher. This is kind of I feel like silver has the bigger opportunity this year than gold, but it's not set up yet. It's back to the patience and discipline thing. You got to have the patience to wait for the setup and the discipline to take action when it actually sets up. I've just been waiting and waiting and waiting. And a dip in here is when I plan to pounce, as long as it looks like it's going to reverse. If it just slices through and keeps going, you don't just jump in. Like, that's not the way this works. So at this point, that's what it's telling me. We have this uptrend of lows. If we break down below it, probably coming down here in this 2750, possibly down at 2630 area, right down in here. I've had that on the chart for, gosh, since we made this high, I think, this area down here. It's been there for a while. Bitty Bitcoin is still doing nothing. Look at this consolidation. Look at this. After all that moving, all those giant candles, with this 10,000 point candle, I think it was high, low, 11,000 point candle. That candle was 11,000 points. Look at these. Nothing, 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 nothing. It's like it died right here. Just been sitting there on that support. So it made the initial move up off that big 11,000 point candle. Did a 618 retrace, and we just parked it. It's been parked here. If we can break above this, sets the stage to go higher. If we break down below these lows that we've got here, probably coming down to the roadmap line. Now, if ES and NQ go down for the daily roadmap line, this one's probably going with it. All right, I don't think that Bitcoin can buck the greater market. This is like the risk on, risk off asset out there. All right, when the market is risk off, this thing sells. When the market is risk on, this thing rallies. It's just the way Bitcoin works. All right, store of value, whatever. I don't care what any other pundit, mainstream media person says. This is how Bitcoin works. It is a risk on, risk off asset. When the market's risk on, we go higher. When the market's risk off, this thing can pull back violently. If you don't like the volatility, don't trade crypto. Period. There's no exceptions. Ethereum still looks like it might go lower. Not turning here. Not turning. NKD, and just kind of churning in the box still. I was concerned yesterday. If we get continuation lower, we kind of rallied back up and just parking here today. still setting up higher lows. The highs are not really progressing either though, and we're just still in the sideways chop. So global liquidity not really playing. Now the big thing here though, when you look at this, you look at all the other world conditions, like even though Trump is kind of setting us up, like what happens if there's a worldwide recession? You know, China's not buying gold because they're trying to play some 4D chess game. They're buying gold because their economy is tanking. It's basically nearing a depression. When you really look at what's going on in China, their housing was kind of driving their whole economy inside, internal. And last year, that kind of all, or I guess back in 2023, it all started coming apart with Evergrande and large contractors that were selling people apartments before the project even broke ground, and people were paying mortgages on stuff that wasn't going to be built for a number of years. And now all of a sudden that went bankrupt and people lost money, and then this unwinds, and they're actually tearing down some of these ghost cities, and I mean, things not looking too awesome there. So leery on China, although their internet stuff seems to be doing pretty well lately. When you look at like Baba, I mistyped type 2B, there we go. Not looking too bad there, but this might spike up here, hit the target, which is not far away now. Might hit the target and then come right back down to the bottom. That's something you gotta, if you're gonna chase this one, you gotta be careful. This one not looking nearly as strong. Baidu, PDD, Temu right here, not looking strong either. Still sitting at the roadmap line. So all those are on the list, on the biggest decliners list. So you got to be careful here. China recovery, it doesn't, like, China could suck the rest of the world down. China going into some funk. So DXY, this one looks like we're on a path to come back down. First move, retrace. Second move, retrace. Next move down. Probably coming down here would be my guess, but always subject to change. We still have resistance up here at 111 that we haven't tested fully. There's the supports, and at this point, I'm just going to take that oval off because we pretty much been there, done that. So this is kind of the flip point right here. As long as we're above it, we have some upward pressure. If we break down below it, we're probably getting down here, maybe going for these bigger downside targets. All right, I go pull the gainers, which is anything moving $2 or more up in the pre-market. When I run the tool, I put it on the list. And then anything moving down $2 or more, I put it on the decliners list, and we look for my patterns. My patterns are the market roadmap pattern, which you've seen the orange line. We're looking for price to be moving up and bounce off of it, and then we set up a go higher level at the 618 and an extension at the 1.1448 as the target, right? But that can also work the other way. If you have a roadmap line and you bust down through it, and then you come up to test it from the bottom, you bust down through the 618, we can get a 1448 extension to the downside. Works the same way. Now, we also look for a market, a measured bounce. And that one doesn't rely on the roadmap line, even though I show it all the time. I use all the charts with the roadmap line. We're looking for a big trend. We're looking for that trend to come to a potential end. We get a reversal of trend, and then we get a retrace. So adds like an extra leg. Now this would be the 618 retrace, and we turn here and get continuation the other way. So the initial trend. Now this also works the other way, where we come up in price. We have an uptrend. This is usually where I find this more often, where I see it more often. We get an initial move down. We get a retrace to a 618. Now this is where it starts being familiar. Looks a lot like the roadmap bounce if this was the roadmap line right here, right? 618 resistance. If we don't close above that and indicate we're going higher for a market roadmap pattern, this can result in a new trend going back down right here and continuation lower as a measured bounce. So that's, we'll at least get the move that's this big here, if not an expansion right there. So those are kind of the patterns I'm looking for when we look through these charts. So right here, SPGI. That's the low. It already hit the target. 550 potential on the upside above that. ECL, already tagging the target today. That could be it. Might be it. Might give it up. That just gave you a couple days to get in, and then boom, right up to the target. Humana. This one has been rejecting the roadmap line. This may flush down the toilet. LSCC. Lattice Semiconductor. Let's zoom this baby out just a little bit. So that's been in a large sideways gunk, for lack of a better term here, just large sideways choppy gunk here for 3 years, almost 4 years. I'm not sure where the end of this is going to be. When I'm not sure, I tend to skip it. If we could break above this 71 area, we might be able to push on up, but we might just come up here and reject again and go lower. So it makes it less likely to get an awesome trade. So 80% of the stuff out there is, it's like 80-20 rule, 80% of the stuff is just complete garbage. Get you 20% of the results. 20% of the good stuff will get you 80% of your gains. So you gotta be vigilant and look for that 20% of the real good stuff. And this right now, looking like we might go lower. It's possible that breaks out and goes higher. One you could keep an eye on if Phillips 66 really kind of interests you. There's more resistance right up here at this prior high. Downtrend highs. It looks like it would go lower, and 100 looks like a prime target to me. Has for a while. ATEX, another choppy sideways hot mess of consolidation. Just doesn't make me feel like I want to get involved in this. I mean, look at this. That's back to 2018. So we're talking 19, 20, 21, 22, 23, 24, 25, 7 years. We've been doing nothing on that chart. That doesn't feel like strong opportunity to me. Somebody be like, oh, their company's turning it around and blah, 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 blah. Look at that, even further back. It goes all the way back to the beginning. Not for me. Just there's so much other opportunity to go find in the market that's just not what I want to mess with right there. Remember, it's your money, right? Why do you want to, like, you should be the one that's sitting here the strongest saying, why should I put my money in this stock right here, right now? If you don't have that, like, if you can't be the biggest fan of a setup, why are you taking that trade? This right here, another one. Sideways, choppy bull crap for years and years. A bunch of these showing up today. LDOS. It's under the roadmap line. Potential to go lower. Man, most of these seem to have turned. OYH, it's under the roadmap line. Now we may see oil perform. That's got resistance right there at the roadmap line. And then bigger down trend of highs. It's got a lot of stuff working against it here. This is look at this. It's a downtrend of lows even. Like we broke down below the uptrend of lows. Downtrend of lows, downtrend of highs. That makes it a channel going down. AXSM as biotech. I don't trade biotech because it's just too unreliable. News from the FDA approving or denying drugs can alter the course of history moving forward, so I just don't typically mess with it. Looks like Coca-Cola had banger earnings. Popping up. Here's the high. Here's the low. There's the 618 resistance right at the gap down. We're going to have to beat that gap to get higher. If we reject, potential to go lower. FSLR. Scraping the bottom here. Might go a little lower. Yang. That definitely looks like we're going lower. Oil. Might pop up to the roadmap line. I mean, that's kind of like where we are. NG1 exclamation point. Let's look at the underlying. Climb it a little bit. There's resistance right up there. If we turn down at it, we could easily end up down here. First move down, retrace. Next move down. Do this right here. It's that same pattern I was talking about right there. Turn down, right down in here. Extension down here. So $2.50, $2.30, $2. So there's your resistance for natural gas. If we climb a little bit, watch for it to reject again. Now, here's the warning. Like, for anybody that's thinking natural gas has got to go higher, think about the seasonality on this baby. Look, the market already tells you the seasonality here, right? We ramp up and we sell off. We ramp up, we sell off. We ramp up, we sell off. We ramp up, sell off. And it's a downtrend. They expect gas prices to go down. There's a seasonality to it. Typically bottoms out in the K. The J and the K. If you're not sure what those are, it's like June and July. August. You have to go look up the futures month codes if you want to know what the... I'm talking about NG. You look at it, it says NGX, NGU. U is September. Z is December. M is June, I think. So J is probably actually May. Maybe April. I can't remember. I don't have the month codes to remember. Like ES only has 4 codes. You got like futures. And futures month codes right there. Yeah, there you go. So January F, February G, March H, April J, May K, April May. June is M, July N. There you go. Hard to remember, but there you go. That's when you see like GCZ, GCZ 17. That's the year. So if you ever want to go look at the current contract, you're like, hey, I want to look at the current contract on ES. You go ESH 2025, right like that. That's the current contract. When we use ES1 exclamation point, ES1 exclamation point, it's a constant contract that rolls over. And that's what these little symbols down here are. They tell you when we roll from one contract to the next. NG1 exclamation point, natural gas. This has a more often rollover. You can see right down here. So Boyle might go a little higher, but it looks like it may reject off of here with a lower high and go down. This is a dumpster fire chart. Always trending down. This does not look anything like the natural gas chart. Down, down, down. All right, decliners, MD, Med P. That looks like it's going lower. FNGU. While this has the potential to go higher, has that potential, it also could rip a bunch of people by dipping right there before we pop up here. Just kind of what it looks like to me. FIS, man. So we gotta be careful on some of these. First move down, retrace. That could potentially be a bottom right there. There's potential. Yeah, on a non-log scale, that actually could be a measured bounce. This low, this high, this low. If we shoot back up, break above that point from where we dropped off from, could be pushing it right up in here. Interesting. So that would be one to keep an eye on. That could be a fairly large upside, almost a double just in shares from the current level here today. Marriott International hit some extensions, probably going to get a retrace back down to the roadmap line. SMCX. So that's a 2x leverage on SMCI. We kind of went through this yesterday to be freaking careful on SMCI. Still has this resistance right here and left business unfinished on the downside. Could it be done? It's possible. It's possible that it got done on the downside, but we look at this, we had to move up, we had to retrace. We've got resistance right up in here. If we were to pop through, it could go as high as that area and still end up down here in the basement. It's a big volatile mover. Be careful. VST. That looks like it wants to come back to the roadmap line. ARM also looks like it wants to come back to the roadmap line. Lower highs. Be careful. Lower high. Lower high. Soft. Tech kind of falling out of favor a little bit. Potentially just this is time to be cautious, all right? Everybody here should be like a retired pro trader, only willing to put your money on the line for the best of the best setups. This would not be one that I would consider the best of the best right now. High potential to go down, but it could break out. So it's not very high probability. VSET. Just churning, churning, churning right down in the basement here. Dumpster fire chart. That's what that looks like. CRDO. Came up shy of the roadmap line there. Retrace. It may come down for another visit. BRT. First move down. It's got a large gap. Gap downs are resistance going higher. Not the same for gap ups. They're not support. Could potentially come down here. SPXL. This has the setup to go higher. Back tested it twice. Lower highs. So very similar to ES and NQ. I was saying that now that we've made the third lower high, this kind of starts tipping the odds that we might get a failure of this pattern. TCOM, last but not least, looks like we're reaching down to touch the roadmap line potentially. And let's see. Let's go pull up Discord and hunt for an opportunity. What do you say? I did put a bonus trade on the list, but let's go take a look. If I can find. All right, where did Discord go? There it is. All right. Let's take a look at my bonus trades channel. Daily setups channel. So we got market all red. Looks like we had about 12 tickers on the list yesterday. Right here. And see that one? Okay. Yeah, a little better. Not a lot of trades. Yeah, okay. Yeah, a few more trades. That's got nice numbers. Only 22 trades, though. 30 is a statistical population. So 22, while it's getting close, it's still not a statistical population. That one, that's pretty crap. It loses on average. That one, infinity, but only one trade. EWC, 80%. And that one, fairly solid. EQIX, garbage, loses money on average. EEM, not the strongest numbers. Best Buy, also not very strong numbers. And AGR loses money on average. So rolling back down, kind of like this one. It has a little bit stronger pattern than EWSC. So INX right there has a $3.50 upside. Let's check out the $1.88 upside. So yeah, INX looks like the one I would probably pick. So IXN, I think I said INX, IXN. Let's check this out. Yeah, nice uptrend going. Global Tech ETF. So if tech fails, this might fail. Caution. It did close above right there. The official did not take a trade on that. Interesting. So there you go. That's the target up there around 89.45. Like right there. Stop is $1 below the low. Right around $80.13. Nice potential. $3.58 upside. These trades typically last 58 days. How long is that? It's trading days, not calendar days. So 58 trading days is right around 84 calendar days. Why is that different? It's because the candle maker isn't open on the weekend. So including weekends, we're talking at 84 days. And this could easily last twice the average. So we could be looking at something out here like 116 days. Maybe out to about here. Maybe out 6 months, August, before we got up to that target. So be careful out there if that's one you want to take advantage of. Now, could it happen faster? Yeah, it could be up there in a week. It could be up there tomorrow. I don't know. I don't know for sure. I just know the high probability patterns. 75% likely to get up here once it kicks off the entry. So that's what I play off of. And it's a high probability pattern. So looking at the bias for the day, kind of think we're set up for this flush. So as long as we're inside yesterday's range, though, it's indecision. Nothing's guaranteed as long as we're inside yesterday's range. We're still in that orange box. Man. So yesterday's range goes from right down here. We kind of opened down there on Sunday night. We rallied up, made a high right there around 2 in the afternoon yesterday. And we've just been sitting inside there. So this is our range. And what's kind of scary to me, when you go from that high to that low, we kind of bounced right off the 618 zone. And we're cruising down, indicating we're going to get an extension lower. At least that's what it tells me. It's like the warning signs that there's potential extension lower coming. That would put it right down in this vicinity, right down here, if this plays out. That may not happen till CPI comes out tomorrow. So you got to be careful. If Trump talking could kick it off. I don't know. What's the catalyst? I don't know. You tell me. I'll be live at 5 p.m. going through it. And I have a special emergency briefing coming up at 11:30, an hour and a half. There's an important thing happening tomorrow. The RSVP, if you're going to come to the Term Market Trading Lab in-person event, the RSVP special rate ends tomorrow. I'm going to tell people about that. So if you want to come hang out with me at 11:30, I'll throw links in Discord. I think the company's throwing them in Telegram. You can come see me. It'll be on Zoom. Otherwise, have a great day. See you tonight, 5 p.m. Make sure you set a reminder.